Hi everyone, it's Chris here, and today is Friday the 8th of October 2010, and I'm going to address the question of whether there is a current gold price bubble, and I don't believe there is. And the reason I'm going to talk about this today is because over the last couple of days there's been more and more attention in the media given to the current surge in gold prices, and more and more people are starting to come out and advocate the view that gold is in a price bubble at the moment. A lot of your mainstream commentators and analysts and economists are saying, yeah, gold's in a bubble, it's in a bubble. Nouriel Roubini as well is one of those guys that is saying that gold's in a bubble, will never hit 2,000. I think he said it wouldn't even hit $1,000 a few years ago, and look where we are now. So more and more attention has been given to gold prices lately and whether indeed it's in a bubble. And just to give you an idea of where it ended up last night, or at the end of yesterday's trade in Australia, ended up at 1354.45. It's a gold spot in US dollars. And in overnight trade, it reached as high, I think, at least in the futures markets, 1365, 64 or thereabouts, and it's fallen back to around 1333 today. And what we're waiting on is the US jobs data, and also any indications of whether there'll be further quantitative easing in the US in the months to come. So first thing to explain is that I've made some notes here on why I believe that gold isn't in a bubble. First thing to explain and understand that gold is a commodity money and has been for thousands of years. It's never been viewed as an investment per se. I mean, people don't really buy gold because they intend to achieve some kind of dividend or yield out of it or capital gain. Although there are some gains to be made in the current market, it's not the traditional or real reason that people buy gold. It's a store of value, protection of wealth. It's a commodity money and has been for thousands of years. It's also important to understand and define a bubble again, and at least from an Austrian economics perspective, I think broadly speaking we can define a bubble as an overvaluation of an asset, which is fundamentally spurred by credit expansion and an increase in the money supply. And then this is further fueled, this bubble, by speculation. And we've seen that with the stock market in 99, 2000, the tech bubble, and more recently the real estate bubble in the US, and we're currently experiencing one in Australia. And it's funny to know that a lot of these commentators that I see in the Financial Review, for example, here in Australia, a lot of these guys who are saying that gold's in a bubble are the same people that are saying real estate isn't in a bubble, which I find really amusing. So moving on, looking at my notes. So gold is undervalued. If you look at it from a historical context, gold is undervalued. And adjusted for inflation, it should be a lot higher. It should be over $2,000 an ounce at the moment. And also when you compare it to other commodities, gold is undervalued. So it doesn't meet that's the main criteria of a bubble, I guess. So it doesn't meet that criteria. Also, there's not a lot of speculation in gold at the moment as well. You have a lot of professional investors or professional speculators who are starting to buy more and more into gold. And talking about investors and speculators, and all investors are essentially to a degree speculators. But currently we have primarily professional speculators or professional investors who are moving more into gold. A lot of big funds are starting to move more of their assets into gold, where 5 years ago they may have only had, say, 5-6% of their assets in gold. Now they're starting to move more towards the 20% plus mark, generally speaking. So we don't have many of these what I call B-grade speculators, your everyday kind of people buying into gold. I'll speak to a lot of people in social settings, and a lot of them are investors. They play heavily in the markets, and we'll talk about gold, and they don't really understand gold. They're not really into it. The few that are buying gold don't really know why they're buying it. They're just jumping on the bandwagon, but you don't have your everyday mum and dads sort of getting into gold yet. You can look in investment magazines and the news agents, and you won't find an article on gold. They'll tell you to invest in cash and property, how to make millions of dollars from property, but there won't be anything dedicated towards gold. Again, I want to stress gold isn't really an investment, but based on the way a lot of modern investors and financial planners think, you'd think they'd probably put gold in there, but they haven't yet. And that's one indication that we're not in a bubble. when you start seeing it on the TV a lot more, and in these magazines, etc., and you have your everyday person talking about gold, then you know it's in a bubble. So we're not seeing that at the moment. Now, key to the current surge in gold prices is the fact that, and this is so important to understand, the fundamental reason that we're seeing this move in gold is because, I mean, gold's been in a bear market for a long time, going prior to 2000. You know, gold is really undervalued. And due to central bank and government policy, you have countries more and more printing money. The growth in the money supply, you know, in countries around the world has been phenomenal. So we have this inflationary policy been implemented by various governments. They're devaluing their currencies, and we're seeing that at the moment with these currency wars. So the dollar's losing value, not just the US dollar, I'm talking broadly about currencies around the world. The governments are debasing the currencies, and so it's not so much that gold's increasing in value, it's really that money is losing its value, or fiat currency. So for as long as banks continue to announce further stimulus packages, like the Bank of Japan has, like the Bank of England's considering doing, like Ben Bernanke again is considering quantitative easing, for as long as you have this weak outlook in terms of economic growth around the world, and that banks keep on promoting these Keynesian policies of stimulus and fiscal stimulus, monetary, artificially low interest rates, well, gold's going to only continue to rise. And it's important to remember as well that the value of money or a currency is not only, or any commodity for that matter, is not only determined by the laws of supply and demand, but also future expectations. So for as long as there's an expectation that the governments around the world are going to continue to print money, well, gold's going to continue to rise in price. And that's no different to any other commodity. If there's been a drought or we're anticipating a poor season in some kind of crop, well, then that's going to be factored into the price of that particular commodity, whether it's wheat or whatever, cotton, etc. Also, another thing, gold is a canary in the coal mine, as I think Peter Schiff and also Alan Greenspan put it recently. It's when gold starts going up, you know that there's some fundamental flaws in the economy or the global outlook. Okay, there's reason why people start moving to gold. It's the canary in the coal mine. Also, we know gold's not in a bubble because it hasn't gone parabolic yet, which is a feature of many bubbles. What it has been doing is pulling back and consolidating and moving further up. And that is a key element of any bull market. Okay, pullbacks and consolidations, and it keeps moving up, and it has a sort of an upward trend. It hasn't gone parabolic yet. Also, you have very few, if any, short positions on gold at the moment as well. Okay, so that's another reason why we're not in a bubble. And also central banks, who largely were sellers previously of gold, are now starting to become buyers again of gold. And we still have a lot of buying to be done in terms of central banks. I think China still needs to and will buy more gold. I think they've been a bit reluctant at the moment, but we're still yet to see a lot of central banks really get engaged in more buying of gold on a larger scale. Many people are still in bonds as well. So there's, I believe, a bonds bubble at the moment that we're seeing. And so when you start seeing people move out of bonds, and when that bubble bursts, you're going to have a lot more people moving into gold. Okay, so that's another reason why we're not in a gold bubble at the moment. And recently, George Soros was talking about gold's a big bubble, going to be a big bubble. And I don't disagree with him. He's had Austrian, or people who subscribe to the Austrian School of Economics advise him on finance in the past. And I'm sure he has a good understanding, though he wouldn't call himself an Austrian, he's not stupid. And he understands monetary policy and the implications of various policies from an economics perspective. He's not stupid. And I'm not denying that gold won't be in a bubble, because one day it will be. And I'll be sure to get out of the market before that bubble pops, let me assure you. So he sees that there's obviously a long way to go, and he's put his money where his mouth is. And he's going to buy now while things are still relatively low. And I'm sure he's anticipating gold to at least double in price, and I'm being quite conservative there. So look, in a nutshell, to summarise, for as long as we are going to continue to see these Keynesian economic policies being implemented around the world in the form of fiscal stimulus, quantitative easing, artificially low interest rates, real interest rates at 0% and less. For as long as we're going to continue to see these absurd, stupid policies being implemented and currencies being debased around the world, well, we're only going to see gold keep on rising. And if you want to ask me, well, Chris, when do you think gold will start to retract and go down? Well, when we stop this nonsense, and when we start returning to sound economic theory and principles, and we stop printing this money and allow countries to go through a proper recession and restructuring, and then we start seeing some real growth out of real savings, that's when I think you start to see gold falling back. When you start seeing us economies going to proper growth, and when we start overturning the stupid policy we've been doing at the moment and following at the moment, and gold still climbing, then you know that, okay, it's really in a bubble. So look, again, glossed over things real quickly. Don't hesitate to ask me any questions and post some comments. I quite enjoy the debate on the gold bubble. I think it's really a no-brainer kind of debate, but still it's fun, and I encourage it. And yeah, all the best, and I'll speak to you again soon. Thanks for listening. Bye.